Hi, Aaron Zapata here, and I am the broker and owner of Crosswalk Mortgage. And somebody didn't know that we have impact properties on the real estate side, full service now, able to offer financing. And so I'm going to come before you today and give you an update on the financial market. And today is Tuesday when I'm recording this, May 14th. Interest rates dropped. And so I don't want to get in trouble with all the legal mumbo jumbo, but my NMLS license number is 1600847. And this is a situation that is very unique in our industry. The stock market yesterday was really bad. And when that happens, money flows back to the Treasury, which lowers the rate over there, which then, by nature and in the way our economy works, it lowers interest rates for mortgages. So all throughout this video, I'm only talking about mortgage interest rates, not your car, not your credit card, none of that stuff. So when you hear me say interest rate, I'm referring to a mortgage, and I'm referring to a first lien holder mortgage, meaning it's a first primary loan on your home that you own and live in. Okay, so a couple of those legal issues there, so you know what I'm talking about, so we can qualify. All right, here we go. So interest rates dropped yesterday. They dropped again this morning. So if you are thinking about refinancing, I just want to run something by you here. I think you can save in Southern California probably $400,000 over the next 30 years if you refinance. And I ran two scenarios just to show you what's going on. Okay, let's assume that you bought a house 5 years ago and the loan that you got was $600,000 and it was a 30-year loan and you may be at a 4.5% interest rate. Now FICO score 740, loan to value 80%. So you bought a house, put 20% down, and you borrowed $600,000 at 4.5% interest rate, okay? Over 30 years, your monthly payment for principal and interest, not property taxes, insurance, none of that stuff, would be $3,040. Total payments of interest over 30 years, $494,000. Total payments over $1 million to buy that house. So borrowed 600, paying over $1 million over 30 years. Why do we do 30-year loans? Because at this number right here, it's the lowest price we can get typically. But if you were to call me and say, hey, Aaron, I'm thinking about refinancing, I ran this scenario this morning. And I said, okay, well, after 5 years, let's say you've paid your $3,000 a month. You've had a total payments of $182,000 in 5 years. And your remaining loan balance would be $546,947.50. Okay, that's an amortization calculator that I pulled up on my website, crosswalkmortgage.com. So right there, remaining loan balance, $547,000 after 5 years. You call me up, hey Aaron, I want to refinance. So guess what? I take that, and I take that $547,000, and today's low interest rate with a 15-year loan, you've already been in it for 5 years. You don't want to refinance for another 30 years, or maybe you do, but let's go 15 years at 3.5% interest rate. Okay, again, FICO scores, and now because you've paid down your note and home values have gone up over the last 5 years, your loan value is now less than 75% of the total value of your home. Okay, loan to value, that's what LTV means. So now your payment's going to go up. Oh, Aaron, why would I refinance and go my payment? Okay, did you hear what we just did? Is we take a 30-year loan and dropped it to 15-year loan, and your payment goes up $900 a month. But you're only paying it for the next 15 years. So you're going to have a total interest paid of $156,000. Total payments over the next 6 months combined would be $703,000. Look at that. Borrow $547, pay $703. So I did the math for you. Aaron, what would I save? Over the next period of time, in the next 30 years, if you were to keep your mortgage payment and that you didn't refinance it, you just kept it, remember that number? You would have paid $1 million for your house. If you refinance it, and over the next 15 years, it's a 3.5% interest rate, and that was a valid rate this morning when I ran the numbers, okay, for the right qualifying individual, that was the number. You would have to pay a total of $703,000, saving you almost $400,000. So your payment goes up a little bit, $900 a month. Your remaining time period of paying it off goes from 25 years if you don't refinance to 15 years, and you're able to walk away saving almost $400,000. And here's something I learned when I was going through the Dave Ramsey Financial Peace University. buyers and lenders, or not lenders, sorry, borrowers who borrow on a 15-year loan typically pay it off in about 12 years because they just want to get it done and they see the light at the end of the tunnel. And that means if that's you, that you would save even more money because you wouldn't pay 180 payments. So hopefully that is helpful to you. If you're thinking about refinancing and you want someone to explain these numbers to you based on your scenario, I'd like to be that person. Give me a call today. My office number direct, 714-482-3217, 714-482-3217, or you can email me at aaron@crosswalkmtg.com, AARON at crosswalkmtg.com. I look forward to helping you. Have a great day, and God bless.